And good evening. This is the Elliott Wave Weekly Update for the NASDAQ 100 being recorded on Friday, August the 15th at 4:30 p.m. Pacific Daylight Time. I am here and starting on the NDX, which is the cash market for the NASDAQ 100, and I'm on my maximum monthly chart. And that data, or this data, goes back and begins in October of 1985. And that's when the NASDAQ 100 started. Prior to that, there was the NASDAQ Composite, and there's, of course, a lot more data that can also be attributed to NASDAQ stocks prior to the development of the 100. Now, using the 100, which is what I use to trade, uh, I have the count as follows. It is matching, but on it with the other markets, for example, the S&P, but it is not on the same degree because there's not or there's less data available here in the NASDAQ 100 simply because it's not been in force that long. It's not been moving that long. So where I have is that I've got one, two, three, four, five primary wave one. And that primary wave one was in March of 2000. Then we had the dot-com bust for the NASDAQ. And I was on the trading floor during this period of time. And it was pretty wild. And what I really do look at is because the NASDAQ was not that old, it resembled more to me, this was the great crash. This was like what we could equate to the crash of 29, although it did not create a worldwide depression after it happened, but massive value in the stocks, and the NASDAQ stocks really took place. And a lot of money was lost. And so many people lost a great deal of money. So very similar to what took place in the other great crash of 29. So, but nothing, but moving along. So I have the high for primary wave one in March of 2000, the low for primary wave two in October of 2002. From there, we've begun on a primary third wave. Inside of primary wave three, what's going to consist of is 5 waves of intermediate degree, of which we have one, two, three, and four complete. And so based on that, we are in intermediate wave five of primary wave five. Um, excuse me, primary wave three. Long day. Um, and that's what I'm looking for. I'm looking for the completion point of primary wave three, whereas in the S&P, I'm looking for cycle wave three, which is 1 degree higher. Still, I think we're going to get a fairly strong period of consolidation and correction, as we will see also in the S&P 500. Now, bringing this down off of that monthly, let's bring it down to the 5-year, and now we can really take a look to see there's intermediate wave three, intermediate wave four, which bottomed in October of 2022. So basically about 12 years, actually 10 years after primary wave two had completed, we got to the bottom for intermediate wave four. Let me just go back out to that monthly maximum. There's primary wave two. That is October of 2002. Now we come back out and we go back to that weekly, and we're at October of 2022. So 20 years, pretty much almost to the day. And from there, we've been in an intermediate fifth wave, which will consist of 5 waves of minor degree, of which we have one, two, three, and four. Wave four completed in April of this year, April the 7th of 2025. So from that point, and now I can bring it down to the daily chart, from that point here, we've been involved in a minor fifth wave rally, a move up, which will consist of 5 waves of minute degree, of which one, two, and three are complete. So basically, since the 31st of July, or basically August 1st, we have been unfolding in a minute fourth wave. Now I can bring this down to the hourly chart, and now we're going to look inside this minute fourth wave. So there is minute wave 3, and then we have wave A, minuette wave A of minute wave 4. So basically what I've been counting since August the 1st, so for the last 2 weeks, is this B wave, and it is the minuette B wave. And today, or actually on the 13th, so it would have been on Wednesday, the NASDAQ spiked higher and reached 23,969, which was a new all-time high for the NASDAQ. And so, but you could see it gapped and then it immediately filled the gap. So I think it's what we've been now involved in. I thought, see, originally I had marked this as wave 3 of this C wave, and that we were doing a fourth wave. Well, then it just sank today. It came down really too far for me to continue to consider that this is a fourth wave of a 5-wave structure that began here. So it came down and just kind of took over wave 1. So this had to be wave 1, and that could have been 2. That might have been 3, but then with 4 had to have really come in here. Even if I did 1, 2, 3, 4, and then 5, it just got too big, and I don't think it's over. Now, what kind of was behind that? We basically have had a pretty strong week until we reached that high, and then this all stayed in. This was PPI, but then we rallied right back out of it. We rallied up in 5, and it's nothing more than this is 1 ABC 2. That's how it's going to be labeled. It's going to be labeled as a 2 because of the 5 waves up, and just all by itself, it's never complete. So 5 waves all by itself is just not complete. So, and where it came in, and then what the follow-up was, a continued, I can bring it down to the 15-minute, and we basically can see. But once we get to the futures market, you'll see how it is a clean 5 up here. It does appear to be 3. So differences between the cash and the futures market, but it is the cash market that I'm using right now to label this as wave C and then the minuette B wave. So 1.382, we popped above it, came back down below. I mean, just momentarily we popped above it and immediately came back down below. So that is the Fibonacci retracement for an irregular B wave. First one is 1.236, which we went through, leaving 1.382. We went above it. So basically we met that requirement or just holding there, and then we started to turn lower, which is another reason why I had left it open with the possibility that within this, before we got this today, that we were going to continue to rise and maybe push a little bit higher and still keep it within that irregular B wave. But that didn't happen, so I'm using this as a completion point at 29,969 and putting the B wave above it. Therefore, we're starting down lower. And you could basically, I can take it over and put it on the line chart. And you can kind of see we have 1, 2, and then 1, 2, 3, 4, looking for the completion. So we're coming off in a third. It is, I have to say, if we don't, we can come down here. And then if we rally and keep going in the rally, then it's going to be left as 3 down to this level. And that would then again point to the fact that the market could just turn again and go higher because we have 3 up, and then we have that down, and then we basically still have, accordingly here, we have 1, 2, 3, 4, and a 5, yes, but not real clean on the hour, just on the closing basis for the chart. So I'm leaving it open that it is a C wave in the B, and it's 1, 2, 3, 4, and there's the 5. And so the C wave, for the C wave, 5 up. and doesn't look that way on that line chart, which is why I'm continuing to kind of just look at it the way I have it. And when I compare it then against the futures market, a lot of these get filled in. So we can get a clearer picture of that. It says ABC, A, B, C, put the B wave, and now we're coming down in three, one, two, and then coming off 1, 2, 3, 4, looking for that 5, and then a little bit of a rally, and then an additional 5 down, and then we're going to have our first 5 down. Now, on this chart, what we need to do is now fill in our fib levels for the C wave, and then we're using extensions. And I apologize. Normally I have this done, but I always catch myself. I get it done on one and forget to come back and do it on the other chart. So bear with me 1 second while I just set this up real quick. And then we'll take a look to see what the expectations are going to be for this wave down. So immediately I'm just going to use 101.618. Those are the two levels that would correspond with an irregular B wave. Also, somehow my other one got removed, and that's this one, which just give us just a straight fib retracement. Nope. And let me just start that over. I think I took a lot off and then forgot to put them back on again. So we're going to put that there, and I'm going to go this way, leave that because it is a minute degree, and put this in for minute degree. And we're going to take all of this basically off 236382, or what's going to be left, and see what that looks like on our chart. So here's 236. Here's the previous fourth wave of 1 lesser degree right there. And then here's 382. And you're going to see how for the NASDAQ, it can stay up pretty high. And so we have coming off, if we're looking initially for 1.618, that's 22,463. Not that bad. I mean, it's over 1,000 points from the high to this low, but in terms of the fibs getting into here, it's well above it. So, but 2.618, which would mean that the Nasdaq's going to get hit harder in this C wave, and that is a possibility. And here's why I believe it could really sink in and sink the market. It was also announced overnight. I don't know. I suppose the president probably put it on his media platform, which was Truth, whatever the name of it is, where he announced that there's possibility of 300% tariffs on semiconductor. You know, the components that go into producing and making chips. And it's just like kind of went crazy. But I was wondering why AMAT, Applied Materials, which does the production of providing all that semiconductor work that goes into making the chips. So if they get tariffed, I was wondering, AMAT presented their earnings yesterday. They weren't the best, they weren't the worst, but suddenly the stock was down $26. And actually down more. And I was like, wow, what is causing that? And then I see about this tariff, and I'm like, okay, that makes sense. So along with that, we likely also saw, let me just do this and put this over here, the SMCI, not that bad, but I imagine they're going to get hit hard. We have Micron, we have NVIDIA, those are the chip makers. So if they're going to get hit with these tariffs, to make those chips, it just really kind of throws a little bit of a wrench into the semiconductors. And so you have AMD, you've got Micron, you've got Lam Research, because there's a lot of companies that are in there. So the NASDAQ got hit harder than the other markets. And so on that basis, is another reason why I stuck that B wave up there, and now should allow for we come flying out of here, because these high flyers, and what's really been supportive of this rally is the strength in the Mag 7, in a lot of the ancillary companies within the NASDAQ 100 that do semiconductor, that are within the chips, that are within, the everybody that uses them. So I think it could just really start to unfold a little bit quicker. What may have prevented some of that from today was that the market, I mean, we had an expiration today, the August expiration. So we had some initial stronger drops down. I'm going to come back down to my hourly chart so we can show that. We had some stronger drops, a little bit of a rally, and then additional stronger drops down. Today, we basically just started by moving down and getting down all the way to the low at 23,651. And so that was a little bit harder than what I would have expected for a fourth wave if this indeed was 3 and we would do 4. And I had labeled that as 4 actually on the futures market. And then this would have been 1 going back up. Didn't work out because you can't go below there. So I left it all the way up to where it broke it. And that was pretty much on our opening. So that kind of squashed that, put the B up there, and off we went. So I think that the way that this will be counted is this is going to be A, B, C, 2, or 1, A, B, C, 2, 1, 2, 3, 4. We're looking for that. This is the initial first 5 down to start to form. I think would be a sub minuette wave 1. And then we get a 2, we get a 3 and a 4, and we get a 5. The expectation would be that because of the irregular, that we're going to use the 1.618. That's a minimum. 22,463. That does come in below wave A. That's also an expectation. Once we go up, since it is part of the flat family, the structures within corrective moves, but because it went 1.382 above it, you're always going to be looking for 1.618 for that C wave, which is going to take it back below this level, but keeping it in that structure that we would consider a flat. And that would put it down to 22,463. Now that is a target. And then overflow could take it down to 0.236, which would be for the minute fourth wave. And that is a target. So that's our first target. The secondary target is down here. And that would be for the 382. And again, going back out to that daily, we see there is the box of the previous fourth wave. And the previous fourth wave comes just really at the area of 2.618. Of where the C wave would be to the A wave would be 2.618 times that length. And that brings it down here. And it also lines up pretty cleanly with the low of minuette wave 4, which is 21,626. This is 36, 26. I give it the 20. I give it the 10 points. And therefore, it almost gets down here, but not quite. So again, 1.618 is first up, but then the 2.618 lines up there, and that would be the overflow. And it could get serious. We already know, if those of us that trade the NASDAQ realize that things can really get going either direction. And a lot of that is just because of the options trading within these individual stocks. Now, there's the other thing, if we just pay attention to our spot gamma levels, when we're looking at volatility triggers, the Mag 7 have been in a heavy duty risk on trading, which means that large firms and traders are selling the VIX and taking that cash, because the VIX is a cash market. They're taking that cash and putting it back into the market via the underlying stocks. So they're buying the volatility of the underlying stocks. And frankly, a lot of that was in the Mag 7 and some of the ancillary stocks that go along with those. So we had Apple, we had AMD, we had Amazon, we had Broadcom, we had Google, Meta, Microsoft, NVIDIA, Tesla. just roaring higher, just gaining, 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 gaining. And that's actually what took us up to that high. So what broke that back again was another tariff. Now they're not implemented yet, but just the thought of a 300% tariff as a threat just tosses the market. We can't forget this was to China, 145, sent us to the April 7th lows, where, then we got the news about, well, I think it might be a good point to buy. And then boom, boom, we raced straight up because this was that we went up, but we came straight back down. And then came that news the following day, and we just ran. So again, um, I think that right now, if that gangs up, and so we can just see right now, we have the first press conference coming out of the Trump-Putin summit now stating, and I knew this actually coming in, but I wasn't going to say anything, it ended without any breakthroughs. So there's been no conclusion. There's no peace agreement. There's no peace deal even to take back to the Ukraine or to anybody. So nothing came for naught. And I'm sure that's not how it's going to be spun, but we have no change there. So I think what also can take over is that if that war is going to continue, that's one thing, not a good thing. And then we have these tariffs on top of it. So that gives fuel to this fire where we could start to unwind pretty quickly. Now, here is the other thing. We are going to get done with this minute fourth wave, whether it's here or whether it's here, we will get done. And then the expectation is wave 4 gets put into place and minute wave 5 back up takes over. Now, again, I believe that that's going to be triggered by a news event, whether it is finally a breakthrough in a peace agreement or a ceasefire agreement between the warring parties in the Ukraine, or it's going to be some resolution to this threat of a 300% tariff on the semiconductors. Now, that would be enough to kind of push the NASDAQ right back up. And so the expectation remains again that we will, and in that minute fifth wave, we will again go to new all-time highs. And in this case, I definitely am looking for above 24,000. In fact, we probably can run them up to 25,000 without any problems. We'd have to come back out here. And once I get that fourth wave, I have a very large wave 1 to match up to it to give me what it should be looking like. We cannot forget that this 17 to 19 was 2,000. In fact, it's even more. 16 to 19, we got 3,000 points. 3,000 points that we're going to put to the bottom of a fourth wave. If it's here, we're 24,000, 24,500. If it's up here, that's 25,000. So you can see we have that potential, and it lies within that minute fifth wave, and it would truly cap off a strong, strong, strong rally that's been in force since October of 2022. So it would not also be so stunning or just, impossible if this finished in October. Like we get this fourth wave done by the end of August, maybe into the beginning of September. Or if it goes all the way through September, which it could, well, then we're looking at October to start the surge, but then that surge would likely take us through the end of the year, which again, I run some algorithms that are actually still suggesting that we're in this fourth wave, and they've got some levels for where to come down, and a lot of them match up right here and here, again, using some just basic fibs, and then but are saying that we should still get between 24 and 25,000, and that still all fits. If we come down to here and we turn and go back up, that's going to be the targets. So everything still is in line for a year-end rally. What could really choke it is, again, developments that come from outside in terms of tariffs, escalation in a war, something really kind of stupid happening, dealing with, anything that could really upset the globe versus just that region. But there's plenty of things out there. And then plus just the day-to-day trading that we do that are heavily options related. So in other words, what's happening in the options, what's happening with gamma, what's happening with what we consider call walls and put walls and volatility triggers are continuing to really be in force with our day-to-day trading. And so, for example, today we had quite a few things take place, particularly because for the NASDAQ, I recommend that we follow the Qs. The Qs trade more options than the NQ and the NDX combined. So here in the Qs, we started above at large gamma 1 in the call wall. So the market was 580. And then when we started to go down, that got broken, and we were looking at 579 because the opening really was right about that level. So 579, well, it broke. It broke. Now we recovered some. We went down, and I think I just let me see something. And I want to just see if the Qs, what their low was. The Q's low was 575.50. 575 was large gamma 2. And I went down and gave it a look. And it held. And then the market came back up midway to the 579. So I really will be looking forward to seeing where, because it was an expiration, we have to understand that a lot of the gamma, which was tied to this expiration at these strike prices within the Qs, or at the same equivalent strike prices in the NDX and in the NQ, they've expired. So that releases a lot of gamma. So it would not be unusual that we see the VIX flip and turn higher. Now, if we get additional stronger downside, that's going to really goose it up even more. So to get a spike back up in volatility would be totally expected, because we might get that market move that'll support it, that'll put the fear factor back into the fear mode. But again, it's just the release of a lot of gamma that's also behind it. So, and then next Wednesday, I believe it is going to be next Wednesday, I believe is a VIX expiration. I think more of that during the week, actually, because I'll find out. So anyway, coming back down, I'm going to go back down to that hourly chart. We're going to finish this up here. Just taking a look at the moving averages. By the way, I did change these back. This is now the 20 and this is the 50. And you can see that in the cash, the market broke the 8 and then it broke the 20 on the opening today. And now actually broke the 50, but then regained it and closed just above it. So there's the 50. Now, if we come down and break that, it's going to add downside pressure. The 200 will be at risk in the cash because it sits at 23,411, 412, and it'll go flat, but I'm expecting the market to come back down to here. So it's going to hit that and turn lower. And so we will be heading lower in all of them, I believe, at least on the hourly chart. The daily's likely not quite affected yet. And you can see, so if we use the daily as well, it's getting ready to break the 8. And then the 20 is going to start to go flat, just about 23,365. I would expect that that's going to continue to be support until broken. And it has to be broken and then heading towards 23,000, and that'll turn this lower. But then the 50 will turn and go flat around 22,720 area plus or minus. And then again, until it gets broken, then it'll arc and turn lower. But then again, that's right around where we have 1.618 support. So we're at that first level where we can find that support. Again, if we're just matching up against here, we have that down further. So again, this will be flat until it's broken, and then this is broken, and then it'll turn lower. But then we have the support of the 200, which is going to sit right here at that 382 level, 21,284. go flat plus or minus. And we have 382 sitting at 21,265. And then we have that low at 21,552. So all of it kind of comes together right in here. Cleaner, depending on how this thing all comes off and how the news impacts it. So right now, the big thing for me is paying attention to this threat of 300% tariffs. And so it's going to be something that's going to kick us to the curb. And I had said that when we were counting and we were looking for this to go up and to new all-time highs, then it's like, okay, well, what's going to drive it lower? Usually there will be a catalyst, some type of a stimulant that's going to start the whole thing, that people are starting to bail. Positions are starting to roll and change. And today was it. Actually, it was overnight, and it was the tariffs again. All right, let's go over and take a look at the NQ. Everything follows the same, so I'm just going to stay right here on the daily. We're in minor wave 5, and that'll consist of 5 waves of minute degree, of which 1, 2, and 3 are complete, just as in the cash. Now I'm going to come down quickly to the hourly, and we can see I've also put that here. Now here, we did not move up like the S&P did and made a new high overnight. We made the high here on the 13th. So we made this high on Wednesday, and that's post CPI. And the next day was PPI. That's just PPI. So Wednesday, and this was Thursday. So again, this was the post CPI little bounce, and that was the high that actually I'm moving to wave 5. So again, finishing this 1, 2, 3, 4, 5. Initially, I had 3 up here, thinking that this all could be coming into a 4. I had put a 4 there. I gave it the benefit of the doubt, but look what happened. Bam, we broke all through it, and that just took this count and tossed it out the window. And as you can see, it's a 1 ABC irregular B wave, but 2, it's a wave 2. And it didn't finish below wave 1, but internally it includes an irregular. And those of you that have followed me for a while, one of the things I talk about often that I've seen that is a change to how I view Elliott is that in a wave 2 position, I'm seeing a lot of irregular B waves. And here's another one. Because this was a hard sell on that PPI number yesterday. And then the market turned and ran up, 5 waves up after. And you can see that here, 1, 2, 3, 4, 5. So it's just like 1, and then it's A, B, C, B, and then a C wave up. Because of its position and what happened afterwards, it's never complete. So in other words, I had this labeled initially as this would have been 4, and this was wave 1 of that 5th wave going up. Well, then what happened? We kind of failed. And then we broke it. We broke the start, and it just doesn't count. So I have to count it as completing this wave 2. So it's, and again, an irregular, not as common, but happening more frequently. And then from there, we worked 1, 2, and then 1, 2, and a 3. So this, I think, is a 4, and we're going to start to come down again. And this we'll probably see on Sunday. Might have a little bit of a rally, but I think we come back down. I don't think they're going to be too excited about stepping in as buyers. But then again, I don't know what else is going to be said over the weekend. So we're going to see on that. Now, taking it back out to that hourly chart, we can take a look at where we think this thing all comes in. So once again, we have 100% at 22,990. That, I believe, will just be support for probably maybe the 3rd wave. And then we get a 4 and a 5. Ultimately, there's my first target area, and that's 22,384 for 0.236 for the minute 4th wave. And then we have 1.618 at 22,322. And that's going to be the C wave of minute wave 4. So again, good place for all of that to take place. And then we have our next level here, and I can add 2.618 right there. And that comes in below. So we have 0.382 at 21,481, 2.618 at 21,240. Now, let's see if I can open this up and take it just back out to that daily chart. And there we have this low at 21,566. So we have 566, 21,481, and 21,240. So that's a little bit larger of a target zone. But what we got coming up right there in the middle of it and is 21,405. That's going to be the 200 moving average on the daily chart. So I don't suspect that it's going to get down and get broken before this thing completes, as if we're collapsing right out of this. Can't say that's not going to happen, but it's not something I'm looking for right now. I'm going to have to work up some additional alternate counts that will cover this. And yeah, it could get very strange from now, but I'm not going to go there right now. In any case, I do think that we're going to continue to build on the start of this decline. We've got the catalyst. We've got some stimulant that'll start to break it down. We're seeing that it's going to be interesting how the gamma levels are going to start to factor in, because whenever I've noticed, particularly in the Qs, that they start to get compressed. In other words, we get call walls and volatility triggers and put walls and everything in large gammas is getting pushed into a tighter range. It's usually just before a break, either up or down, but it's just before a break. And today we got it. So again, how these adjust moving forward, now that this expiration is over, a lot of gamma comes out because it expired. And so it's not going to be unusual to see a spike in volatility to the upside and to see where all of this is going to kind of come back. So lower markets, spike and vol. That's pretty normal after an expiration that really takes out a lot of gamma. But we'll see. We'll see how this all comes out. And it certainly fits the count right now as well. So that is it for the NASDAQ. And the next update will be on Monday morning with the morning update. And that's really it. Have a great weekend, everybody.